Yeah, through the Jackson Institute, I did a trip to Israel and Palestine where I looked into the relationship between environment and conflict. So it was pretty broadish, so to speak, but I did have the business and environment specialization. And now I'm at the World Bank. I work as a climate change specialist, and I focus on climate policy, particularly fiscal and market-based policy that can help countries decarbonize and at the same time leverage climate finance. Back to you, people. Thank you.
Thank you so much, Timila. And to have you here is amazing today. Along with you, I have another classmate of yours, Ileana, who's originally from Bulgaria, and she also graduated in 2016 and currently working with the Pension Protection Fund in London. Welcome, Ileana. It's amazing to have you here, and we would love to hear from you as well on your time at YSE and what you are doing your role at present.
Thanks, Vipul. I concur with Timila. I'm incredibly happy and grateful to be part of the panel. So I came to FES also in 2014 to focus on renewable energy and corporate sustainability, kind of with the conviction to work on green business, so that hopefully one day all business will be green. So also worked at CBAY. I was part of the teams of the Sabin Prize and the Subotka Seed Stage funds. I did an internship in sustainable finance between the 2 years, so that kind of tilted my path to where I am now. That was 5 years ago, so that was when green bonds first were getting traction. And where I'm now, I currently work for a public pension fund in the UK with about 36 billion pounds of assets under management. And my role essentially is to translate sustainability and climate scenarios, carbon budgets into what it means for private finance, into how we make investment decisions. Because the biggest asset owners in the world are pension funds and insurance companies. So it really, my role is to facilitate that process, that money are divested from fossil fuels and allocated towards more green strategies, and not only in renewable energy, but across all sectors. So that's me.
Welcome, Ileana. It is absolutely thrilling to have your perspectives on board today. And with that, we move to Matt, who is our alumni from 2018. And he is a co-founder of Raise Green, which is a financial technology company. And Matt, we'll have you talk more about your experience and about Raise Green. So welcome, Matt. Hoping to get your insights.
Thank you, Bipul and Aaron, for putting this panel together. And thank you, Brad and Gentry, for being inspirations to not only the alumni, but the students as well. And I just want to take a second to applaud the dean for not only changing the name, but really taking a lot of the concerns of environmental justice into the faculty. And, you know, the work I do at Raise Green is really, you know, if we solve climate change without solving income inequality, it is a complete failure, because the system will break again. And so a lot of the time I spent at FES, I'm a scientist by training, and a policy nerd by like hobby. So it was really interesting to me to actually get a lot of the political and economic context. I also had the opportunity to take some classes at the Yale School of Management, which was quite interesting. Also, I was connected to the whole alumni network there, and I wouldn't have started my company without actually doing an internship for a former YSE grad, Eva Gladdick, with Metabolic. But our work at Raise Green mostly focuses on conducting the issuance of securities. So we sell securities into small project companies established by local leaders that requires regulatory compliance, as well as software development, which I'll talk a little bit later about. But it's a lot about educating people what is impact, what is verifiability, and how can you actually have an alternative investment besides the public equities market, which has many problems with greenwashing.
All right, Matt. It's absolutely amazing again to have you as well on the panel. Whatever you said already makes generates a lot of curiosity for me, and I hope that's the same case with our audience today. And with that, I move to our final panelist, who is Maki Tozawa, a graduate from 2019, and right now working with Creo Syndicate as sector manager for National Capital Investing. Welcome, Maki, and I'll leave it to you to just add a couple of lines to introduce yourselves.
Hi, perfect. Thank you, Bipul and Aaron. I'm also thrilled to see Brad, Marion, and some familiar faces on this call. My name is Maki. I graduated last year, so 2019. I was technically in the business specialty, but I say that I focused on sustainable food systems as much as FES YSE allows you to. What I'm currently doing now is working at CREO. So it's a nonprofit that acts as a network for mostly family offices, some institutional investors, pension funds as well, that are all interested or focused on sustainability investing in one form or another across different asset classes and sectors. And my role there is specifically around our natural capital work. So that's anything agriculture, food, forestry, conservation, water. My background before FES was working in the conservation and sustainable development space. So that's been nice to continue that in one form or another. And then I also do some of our work around circular economy and waste as well. And CREO, it's a peer-to-peer network. So it's entirely knowledge building, expertise sharing, investment strategy sharing, and trying to connect people with each other and with deals as much as possible.
Awesome. Thank you so much, Maki, for being today with us. And with such a great panel and so much in terms of the experience that we have here, we also required someone with a similar kind of interest and expertise to moderate the discussion. And so we have Aaron Feng, our recent grad from the Yale School of the Environment, who will be moderating our discussion. Aaron, over to you to just introduce yourselves and take center stage and take us forward today.
Sure. Hi, everyone. I'm Aaron. I just graduated from Yale School of the Environment. And it's definitely a tough year to graduate. So a lot of students here are graduating this year or next year. Definitely share that pain with you all. So at Yale, I focus a lot on accelerating the growth of renewables as well as integrating sustainability into traditional finance and investing world. So at Yale, I took a lot of classes, better understand energy sector, oil and gas, renewables, as well as understanding the financial tool to financing sustainability. So I did a lot of involvement in case competition like Morgan Stanley Sustainable Investing Challenge that I look at putting into like addressing the cash flow problem in China's paper recycling industry, as well as participating in Wharton's Mint competition that looking at food and agriculture early stage impact investing. So definitely during my past summer working at Credit Suisse on their ESG team. So really happy to be here today and speak and share with all of the alumni here. And I'm really looking forward to it.
Once again, I am super thrilled to have you all here, and thank you, Aaron, for agreeing to moderate the session. So I'll leave it to you to take the discussion forward. And first, we will start with a deep dive discussion on the main topic that we have, which is financing sustainability. Aaron, over to you.
Sure. Thank you so much. So yeah, so we will first have about 35 minutes moderated discussion for the question that we have prepared. So for all the audience, if you have questions, feel free to share in the chat box and people will help select those questions. And yeah, so first I have a question for all the panelists. So I think our theme today is called financing sustainability. So what do you guys see in your work what do you think is financing sustainability, and how was your current role contribute to this idea? So first I will start with Tamila, who worked from World Bank Group.
Thanks, Aaron, for the question. And yeah, so the way I look at financing sustainability, it comes across as pretty broad, but basically we look at it from three main ways. It is the standards that you need to have in place, the types of investments that you need to have in place, and a carbon price, with the goal that you need to send the market a signal on where capital needs to go. So the standards, investment, and a type of carbon price that helps gives the market signal towards a low carbon economy. So that's how, in general, I view what it means to finance sustainability. And in my current role in World Bank's Climate Change Group, I primarily work on carbon pricing. I work particularly with explicit instruments. So this is a fiscal instrument such as a carbon tax or a market-based instrument such as a cap and trade program. But we don't see carbon pricing as a silver bullet. And so we work in conjunction with the investments you need and the standards and regulations you need to have in place to ensure that you bring down the cost of decarbonization and help economies transition to a low carbon economy. So in a nutshell, if I had to just say, that's how we look at sustainability. Thanks.
Sure, thank you so much. So next we'll go to Ileana from the Pension Protection Fund.
All right, so for me, financing sustainability means looking at an investment portfolio of every mainstream investor today and making sure that it's compliant with the 2-degree world. And with that, I mean, looking again across the sectors, because we obviously are going to need a new power sector that is low carbon, but we also need to think about materials, different industries, and that's really my role, is to measure our carbon exposure and run some climate scenarios and see what is the risk return profile that we're comfortable with and what are the coming climate risks. And one thing I learned at FES really is how the public and the private sector just work together, because the carbon price that Tamila is working on is really essential for me to go to my chief investment officer and say, there's going to be a carbon price and the risk of fossil fuels is just too big from a purely financial perspective, because that's really what financiers still care and should care, making a return. And my role within ESG, and I should probably mention ESG obviously stands for environmental, social, and governance, is not only on the E side, it's also thinking what is the role of a private investor around social crisis, like the COVID crisis and pandemic that we're going through now, social inequality. So for me, in a nutshell, financing sustainability means shifting the capital from polluting industries to green industries and to climate aligned portfolios.
Thanks, Ileana, for sharing. And next we go to climate entrepreneur, Matt.
Okay, fascinating answer so far. I think of whether you call it impact investing, sustainable investing, environmental social governance investing, whatever. I just call it impact investing, but that's a whole other thing. We really think of it as creating new markets, because if you look at the investments that are being made in the utility scale power sector, for example, I mean, investment banks are making 10 to 15% returns investing in tax equity. So that you don't really need ESG to make that. It's just good business sense. And a lot of the investments that currently exist in the impact world is basically like investing in tech in the 90s. It's just smart, and the large financial institutions realize that. And that's why you see these major allocations, BlackRock, Goldman, of hundreds of billions of dollars just this year doing that. So I will say, you know, we are focused on private equity for accredited investors, non-accredited investors, and institutions in the same capital structure. And really, this is a new market. It's green crowdfunded project finance of private equities. So we have the opportunity to not only define a new efficient investing frontier to see how much the market is willing to pay for these types of small projects, but we also get the opportunity to kind of just really define what kind of return thresholds people are actually interested in for the impact that they're asking for. So, you know, to sum up, I think that there's a ton of ESG stuff out there, but the Securities and Exchange Commissioner, Pierce, has said multiple times that, you know, collecting money, saying you're going to have an impact as a fund manager or a portfolio manager, without verifying and proving that impact basically constitutes securities fraud. And this is a major issue that's a live wire in the sector at the moment.
Sure, thanks. Thanks, Matt, for sharing. And let's go to Maggie.
Yeah, I think it's a great question. It's a really complicated question. We've already obviously had three very different responses already. I mean, first, something Matt alluded to is just is the question of how sustainable or socially impact oriented public markets really could be, that we should all be asking ourselves and continually trying to think about. But in terms of how I view it and what attracted me to the space of sustainable finance is just the tremendous amount of potential. I think, Bipul, you had a slide up on kind of like the climate finance gap, and I'm sure Ileana can speak to this a little bit more, and Tamila as well. But if you think about it, I was looking at numbers earlier this week, just the finance markets for upstream oil and gas. So just part of the oil and gas sector is like somewhere around 500 billion. And then the GIN estimated for 2019 that all of the impact investing that they could calculate was less than that, around 400 billion. And if you think about the trillions and trillions that the capital market is, and you just see that there's a huge amount of potential for impact and social, environmental to grow within those spaces. And there are obviously a lot of great questions that the other panelists brought up about how you truly begin to integrate that. The thing that we do at CREO, so we work with family offices. These are ultra high net worth individuals and wealth owners that are used to talking about generational wealth, and we're used to looking at long-term investment horizon. So one thing that's really exciting about working with this group of people is that they have a little bit more flexibility in the things that they are thinking about. And Ileana can speak to this, but pension funds, institutional investors, they're looking at very traditional and really large investment sizes. So when you're thinking about new sustainability, new energy, new agriculture models, they're all too small for many investors. So what you have is kind of an early stage where family offices and other investment firms are trying to build that market up.
Yeah, I would love to dig into how you guys do it to engage more wealth owners and family office into the sustainable finance world. But first, let's go back to Tamila, that you mentioned earlier about that you work on the carbon pricing mechanism at World Bank. I'd love to hear more about it, because this year definitely COVID has bring a lot of uncertainty in terms of the carbon pricing mechanism. And like, for example, in China, the national carbon markets kind of be delayed or less restricted as proposed before due to the economic slowdown. So as we know, there's a significant gap between the financial requirement for different governments, their climate action plan and available funding. So how, from your perspective, how do we bridge that gap through policy or public-private partnership?
Thanks, Aaron. People, maybe can we like pull up that slide on the, yeah. So thanks, this is such a challenging question, and this is something we work on every day and bang our heads on it. And so with climate finance, like the good news I would say is it has increased over the last couple of years. And I think that's because many countries do realize that climate change has a material impact. But then on the flip side of it is that even if climate finance is increasing, emissions still continue to increase, and the cost associated with the increasingly frequent natural disasters is still increasing. So that's one big challenge that we face. And then the second big challenge, particularly this year with the pandemic, is we expect climate finance to actually decrease. And the way we face this is when we talk to the governments, they are stretched out. Like, they do not have the fiscal space or the bandwidth to work on climate and sustainability issues. And Matt, you rightly pointed out, I mean, from China to like other countries, they're like, it's interesting because they're not explicitly, pulling back, but then you see the delays, right? Like, you're the priority, you're not on the top priority list, even in countries where you expected you would be in high priority. So this is one challenge that we've been facing like every day, actually. And next slide, please. And so at the bank, at least the way we've started to think about this is that we need to talk about sustainability differently. And by that, we are looking at it with three key approaches. The first one is a whole of government approach. And what we mean by this is if we tell ourselves that we only have a decade left to bend the emission curve, like you need everybody on board. It's not enough just for Ministry of, one ministry or one sector of the economy. You need everybody on board. And so that is what we mean by a whole of government approach. The second thing that we really keep in mind is that it needs to be in the context of green recovery. With the current economic crisis, with like massive problems in every country's economy, if climate and sustainability is not going to help in green recovery, that is just dead on arrival for us. So we are very clear that it needs to be, green recovery should be baked in. And then the third critical thing is at a time when so many people are losing jobs, and where we are trying to shift jobs from maybe one type of sector to another, like it has to be in the context of a just transition. So not just a very simple low carbon transition, but just transition needs to be baked into it. So this is the three approach that we are taking. And this is a report, I can send the link later, but then that we just recently came out on how we are trying to approach climate finance to bridge this gap moving forward. And much of this work has been informed because of the pandemic as well. And I'll just give you just a very short flavor. You have project-based financing. That's the investments that go into your wind farms, solar farms, your equity debt that goes into different projects. Financial sector reform, that means how can banks incorporate climate risk? Fiscal policy, which is your carbon tax, tax incentives, green procurement plans. You need to have sectoral policies. And like I said before, like every sector can play a part. So what are the regulations you need to have in each sector? Trade policy. Europe, for example, that has introduced the European Green Deal, is looking at border carbon tax adjustments. So that's something to take into consideration. How can you look into liberalization of low carbon product, liberalization of trade for low carbon products? Then you have innovation. You need to invest money in research for new tech that can help transition to green technology. Carbon markets, it has always played a part in lowering the cost of mitigation. It will continue to play a part. And finally, climate intelligence and data. I mean, this is so critical. I can't even explain, to understanding climate risks, to, figuring out your long-term strategies. This is just critical. So we at the World Bank, we have tried to shift how we approach bridging climate finance by looking at these 8 levers from these 3 approaches of whole of government, green recovery, and just transition. I'll leave it at that.
Thank you so much, Tamila, for sharing on the World Bank level. And next, I will go to Ileana to hear more on your side. How does the pension fund do ESG investing? You shared briefly in your introduction, but we'll have to hear more specifically which asset class or field do you see the most potential growth for ESG integration, and especially during time of post-COVID, and what challenge do you face integrating this time of ESG strategy when you talk to, for example, your chief investment officer at the pension fund?
Great, thanks, Aaron. So yeah, I think that Tamila has the hard job of being at the policy global level. All of these things play into the considerations of a big institutional investor as a pension fund. Because as Maki alluded, the different sizes of investors have different risk return profiles. And within the PPF specifically, but also in pension funds, ESG essentially now is a framework that you overlay over the risk and return profiles. That's the traditional investment returns. And for currently, I feel the ESG is still very focused on E, because from an environmental perspective, and from what Matt mentioned, one of the biggest challenges is how do you measure ESG to prove that you're making progress. And the easiest thing to measure is what are your carbon emissions. So one of the things that I do, and it's really the first step, is what is the carbon footprint of your portfolio? How much carbon does your money generate? Then the next step is what are the different climate scenarios, and how is your return going to change if we're in a 4-degree world? I mean, we'll be wiped out basically. No return, no people. So in terms of, so that's ESG integration really can happen and should happen across all asset classes. And what's interesting about my current job is that we are invested across all different asset classes. So starting with public equity and fixed income, which are the most developed in terms of understanding ESG integration. Those big public companies have the resource to report, publish sustainability reports, so put out that information for investors to make decisions on. But where I see the most impact is no-brainer within infrastructure and forestry. Because as I mentioned, we'll need a new power sector. We need to decarbonize that. We need infrastructure for electric vehicles. We need new roads, public transport. So infrastructure, and especially in the times of the recovery, is even more pertinent and important. And another asset class is private equity, which also probably comes as no surprise because, as was mentioned before, in terms of size, pension funds still write checks at 50 million, and that's too big. But then aggregation of small private companies that can make an impact is where I really see the actual making a difference. In terms of challenges, there are many, and I must have quoted Professor Swar, with whom I took my LCA class more than 100 times, because he said, whatever you do in sustainability, you're an agent of change, and nobody likes change, just babies, and even then they cry. And that just is, I think, the definition of our job, because everything I do, it requires change. It's integrating climate scenarios in investment decisions means changing the risk decisions, changing the risk models, changing the long-term economic models. And there's more than enough evidence at this point, I think, to prove that A, ESG enhances returns, B, that climate change is going to change our economic world and is going to cause GDP losses. But chewing up and making the investment industry understand that is just, it's still a hurdle. Because and then there comes the other risk with that, of saying, oh, we've always done ESG, because now you can see, I mean, Credit Suisse, Morgan Stanley, all the banks, all the big investors are going in that direction, because A, they see there's good business, but then governance has always been part of how you make decisions. You want to make sure that companies you invest in are run properly. So overlaying now E and S on that, to say we've done it is a real risk. So another challenge is digging into what companies are telling you, to what asset managers are telling you. Are they really doing it? What are they doing? How are they engaging? How are they measuring carbon? Have they run physical risk analysis on their assets? So all of these things, and I will finish with the fact that luckily within the private space, there's also a lot of push in that direction. Few of the major initiatives that are, I think, moving the space are the Task Force for Climate-Related Financial Disclosure, which is chaired by Michael Bloomberg and Mark Carney, who's the head of the Bank of England, and now works with the UN on climate finance, which essentially says, if we are going to do something about climate, it needs to be reported as robust as financial data, and it needs to be part of the annual reports. And that's now pretty much becoming mandatory in the UK and in other geographies, but I just am directly impacted by that. So that's still a baby step, but I do hope that basically with investment, once it reaches the tipping point, it can be a huge swing and have a lot of impact. And then the other big thing that's happening is that central banks, along with probably a lot of the work that Tamila does, there's a network for greening the financial sector, which is publishing a lot of reports. And it's coming from the central banks. It's also a push for investors, because unfortunately, I found out that investment management industry likes sticks and not carrots. So the more sticks there are, as like, you have to do it, you have to report, you have to measure, it moves. Yeah, more of a in a retarded way, but it does. And even in the US, which is also encouraging, some of the big pension funds in California are actually really the global leaders in how to do sustainability and ESG. So, and just, I will really close with the COVID pandemic, which maybe another asset class where there is really the potential is sovereign bonds, because essentially every big institutional investor needs to hold, to have sovereign bonds. You can't sell them. You have to support the countries. So it's crucial that countries really think about the just transition and the green transition, as Tamila said, going forward. But just, I hope that investments will change for the better, because now when I'm on calls with companies and with investors, the social aspect is also essential. Like, how did you treat your employees? Did they have protection equipment? Are you taking care of them, basically? And we saw that that things matter. A last example is the clothes producer Boohoo just was shorted, i.e. sold by a big investor because of problems in their supply chain within the times of the pandemic in the global Asia sector.
Sure.
So,
thank you so much, Ileana, for sharing. Try to keep on short on time. And so really appreciate you sharing about how right now ESG shift from E more to S this year due to COVID, and also like we need the policy framework to discipline different investor. So now I will go to Matt. So working in the US on kind of the community investment platforms, I would love to hear more under in the environment, there's no much regulation that's supporting renewables. Like, how do you incentivize investor or community investor to participate in the green transition?
Yeah, absolutely. And thank you. I love your comments, Ileana, the importance of the task force of climate-related risk disclosure and the sustainability accounting standards boards. You know, we really do look at those and apply those to our private projects. And I think that those efforts are essential. The fact that we still think climate may not be material is like shocking to me. How you could have a company that exists on the planet without climate change being material is. But anyway, I'm glad we're starting to get there. It's really exciting progress. And, you know, 2020 is the year environmental social governance and impact investing really came of age. If you look at the inflows of capital, I mean, it's shocking. We're hundreds of billions of dollars. It's amazing. So with that, you know, I do also want to say that everyone in this, you know, is very well poised because, you know, the MEM is the MBA of the 21st century. If you do not have the scientific rigor and that, you will not be able to work in finance because everyone needs science-based targets and everyone who has an MEM is qualified to provide those targets. So, you know, at Raise Green, we're powered by people and we're really trying to figure out how can you invest in local resilience? I mean, it's great to have one utility scale project or 10, but how do you get tens of thousands of local microgrids, EV networks, renewable energy, affordable housing on the neighborhood scale? Everyone can see my screen? Cool, okay. So the problem is the speed of the clean energy transition. It's happening, but not fast enough. And, you know, I'm sure you've all seen variations of these plots, the remaining carbon budget, the gap of how much we have to spend, $400 billion increase, plus or minus. And local communities are really getting left behind in favor of really juicy large scale projects, you know, 7, 10, 15% IRR. But, you know, in order to actually meet these targets, we need everyone involved in creating and financing these solutions. So I ask you, what do you do at the end of the march? Do you write a letter to your congressman or hopefully your congresswoman asking them for a Green New Deal? Maybe, but good luck getting that passed in Congress these days. Do you write a letter to the board of directors of a Fortune 500 company or a FTSE 100 company asking them to stop polluting? Well, like, too bad, that's just the way things are. So, you know, instead, we really want you to raise green and come to our marketplace for local impact investing. So, you know, we're a two-sided marketplace. We help project creators creators and we help investors. For project creators, we accelerate community scale development by giving them the access to the corporate structures and financial models that you're learning about right now that were previously closely held secrets of private equity funds and large financial institutions. Think about Dan Gross's model. Think about some of these other things you are learning. Those would never be accessible. And so from a knowledge equity standpoint, local leaders need these tools and can't get them because they can't get in front of a private equity fund to share them with them or get access to capital formation. You know, and for investors, I mean, I think it's clear that everyone wants to have impact investing. I'm sure many of you are thinking, how can I actually do this in my own portfolio if I have one? And billions of dollars of institutional capital is looking for impact and can't find it. And so, you know, they have a lot of frameworks and there's more and more papers, but why isn't this being deployed in all of these marginalized and frontline communities across the US right now that are asking for these types of projects? So, you know, our goal is to basically give that verifiability to investors by having institutional grade due diligence on community scale projects. And how it works basically is, you know, we go to a local leader, we say, here, create a project company, okay? You can provide clean power to say your community center or your city, which has great credit, right? And so the city pays for the electricity back to the project company, and the investors collect the payments. And the project company can actually sell securities to capitalize on our website where both retail, accredited, and of course, institutions can come together, purchase the same type of security, and that's true blended capital, right? This isn't just grants that's bumping up accredited investor return profiles. This is 4 or 5 different classes of investors, all with the same type of security, which is really fundamentally disruptive and equitable in the financial sector. That doesn't exist right now, and it needs to in a big way. So what we do is we created a software that streamlines project creation. We call it the Originator engine. It's for templatized and replicable project finance. So people can create their own green job. There's roughly 40 million unemployed Americans in the US right now. What are they actually gonna do? Their jobs, a lot of those jobs aren't coming back. They're being replaced by machine learning models, augmented reality, spatial contracts, and all sorts of Internet of Things devices. So, you know, we say, why don't you just create a solar, create affordable housing, sell securities, and actually make your own green job using these templates that we have. And that's how we can rapidly both create a just transition, facilitate knowledge equity, and at the same time kind of meet the science-based targets. I think 2 degrees is too high, frankly, but you know, I'm glad that that's a good target to shoot for. So, and you know, although we are starting with solar, you know, that we look at solar like Amazon looked at books in the 1990s because Jeff Bezos realized if you could sell a book online and store it in a warehouse and ship it anywhere, you could do it for any product. You just need to make that conceptual leap in the consumer's mind. And so really replacing sponsor equity or debt in a project finance capital structure with aggregated crowdfunded equity, there's no fundamental difference on that. You can do it for any project with a contractable cash flow. Think community supported agriculture, biochar projects, electric vehicle charging projects, resilience and energy efficiency, timber projects, microgrids, anything with a contractable cash flow you can use. And so part of the fun we're having is how can we take these like very intricate securities and corporate structures and apply them to a different scale. We're talking tens to thousands of orders of magnitude less than they're currently deployed at. And what advantages and
so much, Matt. I have to interrupt you here. Sorry, I'm running over time.
Great.
So thank you so much for sharing that. It's a really great platform that you democratize kind of like the renewable investing green transition to people who earn less than 500,000 a year and can be accredited investors. I think that's really great. And next we'll go to Mackie. So I would love to hear more about your nonprofit, currently the platform. So on your client side, what average return level, hurdle rate do like Creo syndicate investors usually target? What kind of asset class do you see the most or least tapped by the environmental related impact investing among your clients?
Cool, great. Yeah, that's a great question in terms of like market, in terms of returns and hurdle rate. We work with family offices, you know, people say this expression for everything: foundations, family offices, companies. You know, once you know one, you really only know one. So they're all incredibly different. Some are working in venture capital at very different stages of venture capital. Some are working in private equity. Some are doing project finance. And they're all working in different sectors, subsectors. You know, agriculture, energy, green chemistry. So in terms of returns, I mean, our general network is working with investors who are looking at commercial or market rate returns. So what a traditional investor is trying to do, just building sustainability on top of that. But like specific rates probably vary and are similar to what you would see in each of these categories. In terms of the asset classes, two quick notes since I know we're running low on time. I think most of the social innovation space, impact investing space that you hear about is primarily targeted at venture capital. And while it's really exciting and it's a great space to get some early technologies in climate tech or in agriculture or perhaps off the ground, there's also a question to ask around really, you know, with venture capital, you have one successful company, 9 failed companies. So there's a question to ask around, do you really want to let 9 companies that are impact oriented fail, and how you work around that? But otherwise, something I mentioned before is that family offices and some of the investors that we work with really earlier technologies, earlier financial models that can serve as experiments and kind of pilot phases, early commercial phases for building that market up. So, you know, this happened in the climate tech space early on. It's happening now with the forest carbon or the soil carbon space now, which is exciting to see. And so there's a lot of interest and I'd say, as Ileana mentioned as well, there's a lot of interest right now in carbon removal and carbon sequestration that we're seeing, and that we're seeing some early financial models or companies on. I'm happy to talk more about Creo at any time, but I know we're short on time here.
Yeah, we have 1 more minute. Can you talk about like example of the natural capital that you work on, like the investors are interested in?
Yeah, so one thing that I'm starting to work on more this year is around regenerative agriculture, not only because it's a really useful solution for kind of crop productivity or conservation or perhaps even farmers, but it's incredibly also useful for carbon removal. We're still figuring out the exact amounts and how to measure that, which is really important, but on the broad level, it's really useful. So what you're seeing are some early financial models around how you can help farmers transition to that. So I've actually spoken with an FES alum recently who's working on some of these things. So that's an example there. We have another FESer who's a fellow with us this summer who's working on the tech carbon removal space, and who is seeing how investors can support early tech and I mean it's also early tech in carbon removal. So that's also exciting there, if that answers your question.
Yeah, that's good. Thank you all so much for sharing your experience. And so we are moving into the Q&A session. So for the audience, feel free to share any of your question in the chat box. And I guess the first question we have received is, so for all of you here, that what advice you have for students or young professionals without a traditional finance background or MBA to shift towards the sustainable finance or impact investing space? So we'd love to hear more you guys' advice. So we will start with Tamila.
Thanks, and a great question. And as you can see from the panelists here, there are different ways of doing sustainable finance, and this is a great example of it. So my first advice is understand the landscape and find how you want to slice it. And to be honest, I strongly believe that everyone can play a role in sustainable finance. So that's one. The second thing I would say as a tip is, at least what I find pretty helpful is, so there are a few dedicated podcasts that I really listen to, or subscribe to 1 or 2 industry magazines, online magazines, something, so that you know how the field is moving. I think that's important, and you also know who the people involved are. So that's the second tip I would give. And the third tip I would give is, and finally, you need to understand for yourself what your skill gap is. And, you know, from the panelists, like for each four of us, like I'm pretty sure there were things we needed to learn on the job, right? So you kind of have to identify your own skill gap, learn on the job, take an online class if you need to. You know, maybe there's a class at FES. If there's not, then maybe you can design an independent study, and the professors are such a great resource to help you guide what you can do to fill that gap. So those are the three things I would say. And I will just emphasize this, that my time at FES, like, I mean, it was so incredible, and the resource available is just outstanding. And you realize that after you leave Yale. So take full advantage of the brilliant minds, the brilliant professors there, and they will guide you.
Sure. Can you share about your podcasts that you mentioned?
Yeah, so there are a couple, like, so I have like a series of climate related podcasts. So one is political climate. I mean, it's more US based, but then it looks into both a conservative as well as a democratic view of, like, you know, like climate plan. And it's more bipartisan, and it's useful for us at the bank because, you know, the US is our strongest, is our biggest shareholder. And so that's, I get a US perspective. Then there are, oh gosh, there's resources for the future. I really love the podcast series that they have. They do a deep dive in a bunch of different topics. There's like a one called Drilled, which focuses a lot more on energy. And yeah, there's one focus on adaptation. I'll have to check on my phone, but I'm happy to provide a list of podcasts. And one more that I subscribe to is called Environmental Finance. Like, it's like a specialist industry news source where you get a sense of what's happening in that space. And Carbon Pulse is another one that I subscribe to.
Sure, thank you so much for sharing the list. And let's go with Ileana.
Yeah, well, great question indeed. I second everything Tamila said. One thing I would add is FES, it like gives you so much knowledge on sustainability, and it's always very challenging to manage the breadth versus the depth. But I would say focus on what you bring to the table, because you are the sustainability expert. And yes, you can learn a lot of things on the job, and you inevitably will. And to get kind of the education part out of the way, within investment management, there is the CFA, which is Chartered Financial Analyst. So you can always get that if you ever feel the need. But what you bring is the sustainability knowledge. So I would say pick one or two areas in which you have really deep understanding, be it waste management or forestry or natural capital, but then also take advantage of the breadth, because I read reports on hydrogen one day and then on agriculture another day and on forestry. So you need that full understanding, and again, you are the expert. And then the other thing is, in terms of you already are at this wealth of knowledge, so you have the Yale brand. So don't ever think that not being a joint degree or not having an MBA is a disadvantage. I'm most incredibly helpful to a lot of professors, in particular taught court at SOM, who has like a great, just a great role in me being where I am. So that's what I'm going to say. And also in terms of resources, environmental finance is great. It's there's also Responsible Investor, which actually has a very useful section on jobs as well. So follow the industry, reach out to people is also what I would add, because it's still a niche industry. Sustainable finance teams within the big banks, within the big investors are 1 to 2 people. There's a lot of FESers and Yellies within that. So reach out, ask questions, and focus on where's your skill set and what you want to do, because there's really a spectrum. There's not only the investors, there's policy, there's NGOs, there's a lot of consultants. I started working for a carbon data provider. So they're actually people with very deep knowledge within different areas are needed, and they work with investors and with companies. So lots of opportunities to get into the field without formal education in finance. And just final thing is, though, you have to learn the language of speaking to investors in the financial community to basically pitch yourself and be, I'm of value because I understand sustainability, and oh boy, we need to manage climate change. But you need to sell yourself in the way that the investors understand, and they do care about risk and return. So learning the language is essential.
Sure. Thank you so much, Eliana. I really second what you said. Sustainable finance is a really small field. And next, let's go to Matt to hear about how you transition from a scientist to a sustainable finance professional. There's another person asked here. Amit asked about how to transition during mid-career from engineer to finance field. Thank you.
Yeah, great. And I think that I talked a lot, so I'll be brief. I do think, Eliana, great point about basically like they shouldn't be separate teams, right? The fact that they still are separate teams, investment and green, that shows how far we have to go. You need to know how to read a balance sheet. You need to know how to read an income statement. It's not hard to do. I got a book called Financial Intelligence, which is a really good primer. It's super easy to read. I mean, Elon Musk started SpaceX. He didn't know rocket engineering. He just read a textbook, right? So, I mean, everyone has the capacity to gain these skills, but you need to know things like what's equity, what's debt, what's LIBOR, how do swaps come into play, what is collateralization, and other things that are really, really dry. But like, if you don't speak that language, people will just see you as an activist and a protester, and then you won't be able to actually lever change. So I do think that, again, like, magnify the skill you have, like gain specific domain expertise. Don't try to become a finance person. Like, try to understand how your current expertise in the environment can actually, how can the current tools of securities be used to magnify that impact? Don't try to transform into something you're not. I will say climate fintech is a huge and growing space. There's lots of room. You could also create your own fintech company. So that's an option. And then finally, really just, I don't know, you need to do something you love, right? So like, if you don't like doing financial modeling, don't try to get good at it. Like, find what you really enjoy and figure out how current securities can apply to that, but keep the hyper-specific domain focus. Like, I get consulting work because I know green chemistry. I get consulting work because I know data science and how to apply this sustainable finance. So magnify the skills you already have and try to look at the current tools through that lens. And if anyone wants to talk, email me. I'm happy to chat with anyone, of course.
Yeah, thank you for Matt for sharing. So next we go to Mackie. So we got this question. There's a person study marine science and microbiology, looking to get into sustainable business. So you have a very, I guess, a conservation background. I would love to hear you more sharing on this end. And also we got this another question talking about developing country, sustainable finance developing country. I don't know if you have experience in that, and if not, we can go to Tamila after you.
Yeah, these are all really great questions coming in here, and I would just encourage if anyone wants to chat with me specifically about what's going on in their career, we can spend more time on that. I love what everyone else was saying. Yes, do what you love. Don't let anyone. Understand the basics, but don't try to fit any of these boxes, and don't let anyone take away the joy in what you are interested in. I think sustainability bends to business too much already, so don't let yourself bend to anyone else. So I love that, and thank you for everyone else for saying that. In terms of what's going on with developing countries, I would say that where I did do some work and come from the developing country, I would say reach out to some of the folks at RMI's climate finance team. They're doing really amazing work on working with the governments of some developing countries to transition them to be more climate finance friendly. And then I saw a question in here about the role of a mid-career person with environmental engineering background. I think that's a great background to have. I know so many people who are in some sort of investment firm where they have leveraged really specific knowledge of utilities or how infrastructure is built in order to be the sustainability person, the sole sustainability at investment firms. So that sort of information is really needed because investors, you know, are broad level experts, but need really deep expertise on some things like that.
Sure. Thank you so much, Mackie. So we are currently running out of time, but if any of the panelists would love to share your email address, please send your email in the chat box, or if you prefer connect with LinkedIn, you can say that in the chat box as well. So last, we want to conclude our thought with our Professor Brad Gentry and Marian today on a reflection on our panel today. So let's go with Marian first.
Thank you. Can you hear me?
Yes.
Okay. Well, I thought that was terrific, and I give a lot of credit to everyone, the speakers, the people who are here to see and participate, and especially to Bipul and to Aaron, two outstanding students of mine in the last year or two. So I have questions. I don't think there's enough time to ask them, but I think they're important. The one thing I worry about, and you all covered this, is that you'll jump too far and think that the financial world is more ahead of on green than we think, and that will cause problems and frustration. And you know, just a reminder that time is a key variable in any kind of change, and we have to be patient. And we don't really teach you how to be patient here. You know, we teach you to get right out there and save the world. And in some ways, I think we should slow down a little bit so that we can be realistic and even clever with strategies and so forth. So I wish that for all of our speakers as you go back to your jobs. And I want to say it's really delightful to see you, and I've actually knew all of you, and it's really a pleasure.
Thank you so much, Marian, for sharing. Let's go with Brad.
Yeah, I'll just echo Marian's gratitude to all of you. It's wonderful to see your faces. And it was such a great spread from huge pension funds and the World Bank to community development and impact investing. And I thought your answers were really good, driving into the specifics and providing actionable advice for our students. And Matt, I have a question for you. How much do we have to pay you to use your phrase, the MEM is the MBA of the 21st century going forward?
That's actually on Creative Commons license, so feel free to use it without attribution.
Excellent, excellent. And thank you, Bipul and Aaron, for putting this together.
Yeah, thank you all for participating, and thanks for all the audience here.
Thank you, everyone. It was
lovely.
wonderful to hear your insights. Ileana, Matt, Demila, and Maki. It was absolutely brilliant to hear some of the perspectives that you shared today, and also to understand, I mean, I totally agree with the fact that we should not really focus much on how the financial world is being run or how do we fit into that segment, rather than build our own skills and make sure that what we know and what we love is made use in a world that can make an impact on a larger scale. And I hope that the communication and interaction that we started today goes on further with people contacting you, and probably us as well getting more insights in the coming days. Once again, thank you all. Thank you, Aaron, for being such a good moderator, keeping us all on time and making sure that we run the session as we planned. And last but not